Good morning, traders. So we're still using the Bill Williams and trading the Wall Street, the Dow Jones. So yesterday was kind of a nothing day. We did get a bit of an indecision range bar, and I'll put the levels on there now. So that was the high of the day, and that was a low of the day. Okay. Now there are a couple of things at play here. First thing is that my oscillator is grouped to the downside with a potential double bottom here, and we've got a higher high on price. Okay, so we'll look at that at the lower time frames just to confirm it, and you can see quite a bit of interaction at this bottom level here. So we've got a pin bar here, we've got an inside bar here, we've got some tops here. Okay, so there's a lot happening at this level. So it's kind of what you would expect some buyers to see some value and step in. Nothing, no wide man number one on the daily, which would be rather interesting if there was. For example, this here was a wise man number one, but didn't play out. We would have made a bit of money out of it, but not much. And we are looking to see what's going to happen. So now you can see the first day of the Fed meeting, and it's a range bar. So expect the same for most of today. So we're just going to sit inside this range, and the range is pretty big. So if we go there, it's 400-point range, so it's relatively large for the Dow. And until the Feds make their announcements later today. So I think should be around 7 p.m. South African time. So it'll be sort of afternoon in the US. But anyway, so that's what we're waiting for. We're waiting for the Feds to make an announcement. And I think the consensus is that there is going to be a rate hike. Their final rate hike for the year will be in place. We know that Trump's not happy with that if you're watching Twitter. And then the second thing is, I think what most people are looking for is to see what their plan is for next year. Now, are they going to continue raising rates? Are they going to hold? And I think that's the big question that investors have right now. Anyway, let's get to the 4 hour. So if we start looking at the 4 hour, you can see, just move that to there. So, no, sorry, that was a previous low. What I did want to do though is do that. Okay, that could potentially be the start of a trend. So it's always good just to draw them in, especially when you've got a higher low. Just draw the line in so that you're aware of it and you know what's going on. So if you look at the indicator here, it's kind of flat, flat, flat while it was moving down, and now moving up to the upside. So this pin bar here is a potential wise man number one, and 1, 2, 3. So the next entry would be a break of this fractal point, really. It's not a really decent wise man number one. It's the deviation from the alligator is not that great. It's there, but it's not brilliant. So we have a potential bullish signal here, and then we have another one here with this inside bar. So there are two bullish signals. And basically all it's telling you is that there are people that are starting to buy off this level. Okay, so they're buying around this level with the anticipation of the market moving with the Feds. Okay, now there is something else that I want to point out at the moment, and that's the importance of your trend line. So you can see here, this was the original downtrend we broke through, but we didn't retest. It came all the way down and retested down here. That there is a retest. That's why I say to you, that is a fairly strong bullish signal there. It's off a bottom level, it's off a diagonal level, and then you had a second attempt at this level. You're always looking for a second attempt. There's my second attempt. So essentially now a break above this fractal level of 23,936 will give you the confirmation you're looking for a change of direction to the upside. Okay, so get down to the hour, and you'll see bit of a different picture here. You can see yesterday we sort of trended up to the upside, back onto the alligator double top, and then basically blew away to the downside. So, and I can almost guarantee you that the double top played out. There you go. So this 1, 2, 3, 4, 5 bars was your double top. This tail here was your bottom, and basically in that range, and then broke to the downside, and that was your target area. And look what happened. First hour missed it, then we moved down onto it, then we rallied back up before coming back to test it. So we tested it twice. This bar here, that's all futures market. So this was in trading during the trading hours. Okay, if you look at the awesome oscillator here, you can see an inverse head and shoulder. So there's a shoulder, head, shoulder. So that's another signal that's happening. We've got buyers that stepped in the buy zone here. So I'd be fairly interested to take a trade to the long side. I just want to see what kind of risk we're talking about here. So 200-point risk. So, if you put in a smallish position that you can stomach within your risk profile, then I would be quite willing to put a trade in here. Okay, so the way I would do it is looking like this. So let's just delete all the noise. So we do have a double bottom here, and you see this tail here is a wise man number 1. So the break above it was long, and it came all the way back down. Would have stressed you out a bit, but the reality is your stop should have been below this this tail, and you should still be in the trade. Okay, so from a 12-minute perspective, we have now crossed over the alligator. Okay, so sorry guys, I'm just managing my risk here. So it's either a 100-point or 200-point stop loss. I think 200 points is probably the better bet, and you can see why I'm saying that is because that seems to be the trend line. So any pullback will more than likely target this area here, 23, call it 23,600 area. If you look at the awesome oscillator here, low, higher low, and we're over the zero at the moment. And at the same time, this has given us a double bottom on top of the alligator. So if we're truly trading the fractional levels, I suppose what you should be doing is wait for a break of this 23722. This is the fractional level, and then have your stop below pretty much where this fractional is here at the open, which was 23,600. So 23,600 and 23,722. So it's a 122-point stop loss. Okay, another way of doing this is just to wait and see what happens at the European Open. I think that, to me, my gut is telling me that they are going to raise rates, which would drive the market up briefly, but then it's going to be digesting what else they're going to say, which may drive the market completely, or it may force them, actually force us to break the levels to the downside. So yeah, so I think I'm fairly interested in the setup that I see at the moment. Not so much on the half hour, because you can see the grouping to the upside. So I'm expecting a pullback, and I think, for me, watch this diagonal trend line. That's the one that, if we get a bounce off that, and the bounce that you're looking for is on a 12 or 15-minute chart. You see, there was a bounce, then you had an inside bar. Okay, then the market's closed, and then after hours, sort of gap down, and then started running. So what I'm looking for is any kind of bounce off this level. That would be the one that would interest me. Okay, now what I want to do though is I just want to get to the ichimoku. Okay, 12-minute ichimoku. We've had a crossover, which is bullish, but don't think the cloud has got a twist. No, so there's no other signals here. The only signal that I do have is this oscillator here. We are in between Kijisen and Tegensen, so that indicates ranging. For all intents and purposes, we are below the cloud, so the trend is still down. Okay, half-hour trend is still down. The only difference is we've got a flat Kijisen, and Tegensen is starting to point up. However, as I pointed out just now, the oscillator's grouped the upside, so that is an indication of more moves to the downside. So from a Ichimoku perspective, downside could be to come and test the break of Tekensen somewhere in this area, or possibly on these tails here. So that's the level to watch, which is 23,640. Just see if we've got anything to the left on the cloud. Yeah, we do have some flat cloud here as well, and that is pretty much a level, so there's another bit of flat cloud there. If I come back to the beginning here, oops, that was too high up. Okay, too high up. Okay, no, doesn't look like we have much that's close by. Okay, so let's ignore that. So all I was looking for is flat bits of cloud, so like this here. Okay, if I go to the 4-hour, we've got to go very far back to see it. And you can see the lines I drew just now. There's flat cloud there. That's too high up from where we are. That's where we are at the moment. No, there's nothing. Okay, so wherever the cloud goes flat like this, you can always use it as a level as well. Anyway, so 4-hour trend is still down. You can see how we are tracking Tekensen. And the 4-hour is nice just to see that this downward trend is still intact. There's a bit of a warning here with this pin bar and then this inside bar. So we've got a double warning here. We do have, I suppose there's nothing else except for the level that we're off and this pin bar that's in this inside bar. So we've got a potential bearish pattern, bullish pattern, and we've also got a level. But technically speaking, if you're going to trade the 4-hour, you need to wait for a break of this fractal here for the long. So that's 23,926. Okay. So 4-hour is still very bearish, and the daily is, we are so far from Kijisen and Tekensen that I'd be very reluctant to be short here. Okay, even though we've got measured moves, target still in play. So in other words, this move to the downside, this is a measured move, and we have broken below here. So there's our measured move there. Let's move that level. Let's move that level down. Just look to the left to see what's there. Nothing much, in the middle of nowhere. Okay, so yeah, tough call. Well, tough call for shorts for me. Let me put it that way. I'd prefer to be short a little bit higher, so closer to Tekensen or Kijisen. Okay, and if we look at the weekly, get rid of the noise. Now that's not a pretty picture at all. We're breaking through the cloud. Kijisen, Tekensen pointing down. The only bullish pattern or bullish signals I have is the fact that the oscillator is grouped in the buy zone. In other words, it's horribly oversold at the moment. And if I look at the monthly, nothing really in play at the monthly except for our oscillator. Now, the interesting thing to note about the oscillator right now, which is Williams percentage R, is whenever, except for here, but whenever we have pretty much entered this zone, we have rallied. Okay, so this one here, we didn't really rally. but majority of the other times we did rally. Okay, so that's kind of what the oscillator is telling you, but if I look at the price action here, this is horrible. On any of the lower time frames, I'd be looking for shorts here with a stop above this level here. Okay, so anyway, so Ichimoku is giving you a mixed bag, which is to be expected. So as far as I'm concerned, I think be very cautious. If you're going to trade a lower time frame, stick to that lower time frame. So if you're going to trade the half hour, stick to the half hour and trade the levels of the half hour and trade the price action of the half hour. Ignore your higher time frames. Watch your oscillators on the lower time frame and trade accordingly. Okay, so anyway, guys, I think that's it for me today. I am tempted for a long, and that purely because I can see there are some price. There's a little bit of price action that's indicating a move to the upside. We are off a strong level as well, and I'm also anticipating that the rates will be hiked, which will drive the market up. But it all depends what else the Feds have got to say. But I do expect a little bit of a rally. And that rally up will give us another entry to the short side as far as I'm concerned, because this trend is pretty well intact. So the one level that I was watching yesterday was here, this previous swing low. You can see we got there. Classic entry short, and would have taken it out at the close. Anyway, guys, so that is my take for now. If we do rally, we're going to get to a level, and that level will be an entry short. But what I am looking for is a bit of a long up to potentially 23,900, 2400 possibly. Just use this line here because there's my next swing low, and there is my next level there. So that should line up with the alligator. So first we're off on the lips, then the teeth, and then the jaws. Okay, so those are the three levels that we're looking for. Anyway, guys, just stay safe. You never know what happens with the Feds. Could be very volatile and could smack your stops pretty quickly. So be careful and keep those stops pretty tight. Anyway, guys, that's it for me today. Hope it helps, and I'll catch you later. Cheers for now.